Ja, bye bye, bisous. Good morning, good afternoon, good evening, everyone, and welcome back to the breakfast show. Hope you're all having a wonderful start of your day, or maybe end of the day, beginning of the weekend. We have some things to talk about. We've had Broadcom late yesterday. Stock is down a little bit. The results were good, so why is the stock down? It's always the same story, price to perfection. Now we do have some PayPal news, some good and some bad. Now we'll go over a couple of extra things, Nvidia related, ChatGPT, and some other stuff as well. It's Friday. We'll see if we can end the week on a more positive note. Yesterday, the day started, let's say, red. I do think that towards the end of the day, we did see a lot of stocks turn green. So that was quite good. There are also a couple of clips that I want us to react to with regards to next year, 2026 sentiment, and then also a little bit more on the whole Broadcom earnings report. So first up, with regards to Intel, again, I'm out of Intel at the moment. Did very well, thankfully, with the timing of the options. Was it pulled out of the mud by Nvidia and the government? The stock, yes. The company, no. That's very, very simple because one, the government actually makes money on this investment. It's not a bailout. And the investment by Nvidia is also a strategic business investment. We'll see what happens with that in 2026 and onwards. With regards to Oscar, we have zero news at the moment with regards to ACA. So we'll see what happens with that. But right now, if we go and look at the pre-market, this is what happened yesterday. This is basically the pre-market right now. It's okay. It's okay. We do see that Broadcom is down 5.6%. We'll talk a little bit about that during the live stream. If you look at big tech, we see that Netflix, Google, Tesla, Amazon are the ones that are green at the moment. Looking at fintech, we have here a 50-50 split. Robinhood is up. New Shift4, Visa, American Express, Sezzle, MasterCard, Webull, and Klarna are green. All the rest are red. Yes, PayPal is down 0.5%. We do have another analyst downgrade on PayPal, but we also have a little PayPal YouTube announcement, collaboration, like I'd say, announcement, but more specifically on the PayPal stablecoin, which again, there is a lot of good news with regards to certain aspects of PayPal's story. But yeah, we'll talk about that. Neoclouds are still mostly red at the moment. Yesterday, a lot of these names, actually, let's look at this. Yesterday, a lot of these names were deep red at the start of the day, and then some of them did turn positive. So Cypher positive, Iron, even Nebius turned positive yesterday. As for chip names, like I said, Broadcom is down. I mean, almost everyone's down. Now Nvidia is actually turning green. There is also a specific reason for that. As for the other stuff, BMNR is green, United Health is green, Uber is green a little bit, Adobe, Mercado Libre is back above $2,000, CRM is green, Oscar is a little bit green. So we'll talk about that. No, I did not sell my Uber stock. Why would I sell my Uber stock? So let's first start here with Broadcom. So Broadcom reported yesterday, good report, good growth across the board for For the company, stock is down 5.9% at the moment. Why is that? I mean, the business itself, full year revenue, 24% growth. For the quarter, 28%. AI revenue up 65%. So all of that was good. The thing here is when you go into a report when your stock year to date is up so much, and especially more recently, it's up quite a lot, you are going to be priced to close to perfection, right? A trailing P of 104 times, a forward one of 48 times, even price to free cash flow is close to 50 times. So it is, voilà, Jerome Powell calling me. Always a good time. So it is expensive for what it is. The execution is quite good, if not very good, for Broadcom. So it has more to do with the pricing of the stock and less to do with what Pixel user, of course, Pixel user, Google shareholder, Gemini user, Pixel user, you name it. It has more to do with the pricing than with the actual results for Broadcom, because across the board, the results were good. So are you going to complain that it's down now a little bit? Probably not. 90% CNBC guest sold Uber. Okay, cool. Couldn't care less. So that's Broadcom, although we do have here some comments on it from HSBC with regards to Broadcom's earnings report, more specifically the AI backlog. They also have a big AI backlog, a bit more realistic, I would say, than the Oracle one.
Some questions about that order backlog at $73 billion. Also, Hock Tan, not giving a lot of clarity about the guidance moving forward in the near term, but you actually think that, according to your most recent note, you think that backlog number is very bullish for the company and you see more upside. Explain the thesis that you're seeing when a lot of other investors seem to be selling the stock.
Sure. I think if you look at the backlog, that was through, if you annualize it, it's basically almost 50 billion for next year. That's on track to where we are right now. I think the sell side consensus was only about 38 billion for next year. So this is definitely ahead of that. And I think, as Hock said on the call, this is just the minimum, right? There could be upside to that backlog order going forward over the next couple months. I think the other very positive takeaways, the AI networking, I think, is a big theme. If you analyze the networking, the part, that's more than 20 billion. That implies next year it could be about 13, and that's considerably higher than I think where most people are for the networking part of the business.
All right, so you're focused on the networking part of the business. You also call that bullish. So you're talking about their fourth customer, Anthropic, placing additional orders. Named. Who do you think that fifth customer is, and does it matter who the customer is or how much they spend?
Yeah, I mean, I think, the initial size of the order is not that big. It's $1 billion by the end of next year. They haven't disclosed who that is. I think they have highlighted it's a potential, data center customer. There aren't that many out there. So I think there has been some press reports about Microsoft potentially being that customer. So we think that would be represent a very large customer as well. I do think that there was a lot of emphasis on OpenAI as well, but in our view, it's not that important next year to their earnings. We've seen very positive, supply chain from TSMC. So that's one of the reasons we've been very bullish in the last 3 months. We've seen a significant upper revision at TSMC's order capacity as well.
All right. This stock's gotten a bid because it actually helps Alphabet make their chips, their TPUs. But at the same time, a lot of concerns about what's called customer tooling, the idea of customers making their own chips and maybe even cutting Broadcom out of it. You're one of the more bullish analysts on the street. You got a price target of 535. The street consensus is at 442. Does that mean you're not concerned about that at all?
Yeah, so that's a good question. I think the reason people start to see some concern is that if you look at the TPU project, next year, MediaTek in Taiwan will have a TPU project with Google as well. But I think if you look at the scale, MediaTek's project is probably only going to be a couple 100,000 units, whereas Broadcom's going to ship well over 3 million next year. So the scale is not even similar. But I think what's interesting to take note is that if you look at Amazon, Amazon has been doing a lot of the front end portion of the chip themselves. So it's a different model than what Google so far has chosen. But the performance of Amazon's Trainium definitely has lagged behind the TPU, which at this point is pretty much 100% done by Broadcom. So I think there still remains debate, in terms of the performance of doing the front end yourself.
And that was one of the questions yesterday during the earnings calls, and probably also one of the reasons why the stock took or is taking a little hit right now, because we do know that eventually all of these big tech companies would like to be vertically integrated as much as possible to cut the cost. Now, this analyst is saying, okay, yes, that might be true, but we're still talking here about a huge amount, first of all, of customers, of orders, and he doesn't think it's going to impact Broadcom, or at least not in the short term that much. Now, there might or might not be that question around Microsoft. We'll see what happens. He has quite a high price target on Broadcom compared to the consensus number right now. So he's quite bullish. So of course he has to sound and say bullish things on Broadcom.
Frank, one other question for you. We were showing the valuation of both Broadcom and Nvidia. If you look at Broadcom, it's trading about 45, 46 times forward earnings at a significant premium to Nvidia. Could we maybe just be seeing investors react to the valuation on this company as we've seen with other earnings reports? Because it was generally a very good report. You seem to think so. I think a lot of people thought the report was good. It seemed to be the call that changed the sentiment.
Yeah, I think basically a couple things around the valuation. It does look optically more expensive, but I think there's two ways you can look at this. Number one, I think the earnings in general still need to go up. So I think most of our peers will have to take their numbers up next year and even the year after. So the valuations won't look as expensive as it does today. The second part is that arguably, the multiple does deserve to trade higher, maybe even than Nvidia, because if you think about the customer profile, they're being underwritten by tier one hyperscalers. Nvidia's strategy going forward is going to start to move to more enterprise, neo cloud, and sovereign, where there's less comfort around the capex spend there. So
I'll just cut him short here. Look at the difference of the forward PE ratio of Broadcom right now and the forward PE ratio of a Nvidia at the moment. Now, of course, when you look at forward PE ratios, it's based on current analyst expectations. Those things can change. Even the price doesn't change, the expectations can, and that can make a stock more expensive or less expensive depending on when these expectations will change. But here, Broadcom, 45.8 times forward PE, while Nvidia is trading at 25.5 times. Now, we know that in the recent months, of course, there has been a shift, right? That shift from the Nvidia OpenAI camp to the Broadcom Google camp, right? Broadcom and Google have started to go up quite substantially. And then you have Nvidia and the likes that have come down, not substantially, but have come down a little bit and have been plateauing at the same price while the business continues to execute each and every time. So will we see a market sentiment flip here? Because there is a disconnect, and it's not like Broadcom is not growing nicely. It's not like Nvidia is not growing nicely. Of course, Nvidia is worth twice what Broadcom is, but the forward PE disconnect here is real. 45 times Broadcom, 25 times Nvidia. Are we going to see a flippening? Maybe if we go and look at, let's maybe even start here with an AMD, right? AMD topped $266. Now it's around 220, 218. Okay, so it's not such a big deal. If we look at Nvidia also topped here exactly at the same price. Then we have a little pullback, and now it's been basically the same price it's been since August. But if you look at a Broadcom, right, the Broadcom has had a very, very nice period. Especially if we go here, September it was just under $300. Yesterday we closed above $400. So you can see the difference between them. And of course, there is Google. So could we go into 2026 where suddenly the sentiment switches back to the Nvidia camp? It's possible. It's definitely possible because, there is now a disconnect. There is a disconnect just purely on the pricing of all of it. Seems like the market is now saying, okay, we're willing to pay a lot more for the non-Nvidia stuff than for the Nvidia stuff. Ads on live stream? Well, I don't know if, I mean, probably yes, because YouTube does ads. Unless you have premium, then you don't have ads. Then, if we go and have a listen to the, of course, #1 bull on the market, we have here some comments from Tom Lee with regards to S&P in 2026.
This record-setting rally and how far stocks can go. Let's ask Tom Lee. He is FundStrat's head of research, a CNBC contributor. He's with me at Post 9 because he is out with his 2026 outlook for stocks. Thanks for sharing it with us first. We appreciate you for that. So let's get right to it. So we're going to 7,700. That's the headline. So that's a pretty decent year in the year ahead. Not quite as robust as we had this year. Why that target?
Well, we're 3 years at 20% gains because the S&P probably closes 7,000 or so this year. And so I think there's a deceleration of what the market can do next year. But that 10%, I think, belies what will be a very turbulent year, similar to this year, where this year we had tariffs and sort of a Fed that became hawkish again. Next year is a year where we have a Supreme Court potentially overturning tariffs, and then a new Fed, which will be tested. So I think we could have what looks like a bear market in 2026, but we exit strong.
I mean, even with a new Fed, and it's divided, obviously, as we learned yet again yesterday. We know from what the president wants to do in terms of who he wants to appoint that the bias is going to be towards easing.
Correct.
So why so much turbulence around that particular issue?
You're right. I think next year the real message at the end of the year will be there's the Fed put back in play. So then you have a White House put and a Fed put, which are tailwinds for stocks. But before all that happens, the new chairman has to be confirmed. It takes about 90 days from the time that his nomination takes place and the confirmation. And the markets always test a new Fed chair. So I think that is the January to October period, is that the Fed is being tested, even though we know it's going to be a dovish Fed and a Fed put comes out of that.
We think we're going to get, at least if you believe the outlook, which it's your own prerogative, a cut into a strengthening economy, though. At the end of the day, that supersedes everything. Isn't that partly what the last couple of days, yesterday and today, are about?
Yeah. This was in my mind, even though people positioned it as a hawkish cut, it's actually quite bullish for stocks because the Fed, again, is now weighing the downside risk to the economy, which is the Fed put coming back into play. Plus, as you know, QT ended, and even though it's not officially QE, it's the absence of tightening, which is QE.
You call it whatever you want. If the effects of whatever they're doing are nearly the same as if you want to call it QE, the bottom line is stocks went up and rates came down.
Yeah.
And if that continues to be the picture, it's going to be hard to lean against the equity market in that scenario.
Correct. And the right groups are responding, as you highlighted. Small caps hitting record highs, financials rallying. And now what we just want is the ISM to turn. But if housing can turn, then you've got a real broadening taking place next year.
Okay, so I said yesterday the exact opposite of what he said, or 2 days ago. First of all, I think he started by saying that it was
this record-setting. Ask Tom Lee. He is FundStrat's head of research, a CNBC contributor. He's with me at Post 9 because he is out with his 2026 outlook for stocks. Thanks for sharing it with us first. We appreciate you for that. So let's get right to it. So we're going to 7,700. That's the headline. So that's a pretty decent year in the year ahead. Not quite as robust as we had this year. Why that target?
Well, we're 3 years at 20% gains because the S&P probably closes 7,000 or so this year. And so I think there's a deceleration of what the market can do next year. But that 10%, I think, belies what will be a very turbulent year, similar to this year, where this year we had tariffs and sort of a Fed that became hawkish again.
Okay, so I said yesterday and good morning to everyone joining. I said yesterday, I believe the first part of 2026 is actually going to be the opposite of 2025, and then the end of 2026 with midterms, with exiting towards 2027, the market may be looking even further beyond with regards to this whole AI story. That's when we see turbulence. Tom Lee here goes the exact opposite way, sees more turbulence at the start of the year and less towards the end of the year. I mean, he did just say that the Fed became hawkish again, probably talking about what has happened before, because, I mean, this week the Fed did definitely not sound hawkish at all for once. So, I mean, he's not bearish. He's still expecting 7,700 for the S&P, which is not 20%, is 10% if we do close out at 7,000 this year. But okay, interesting. Yeah, we will. Of course, we will have turbulence. We will have ups and downs. But hey, as long as the companies keep performing, and whatever happens with the tariff story, again, it doesn't get worse from here. It's either the tariffs go away, which again I don't think it's going to happen fully, or we just continue what we have right now. It's specific deals, etc., etc. And we'll see, because currently the tariffs are, in the grand scheme of things, have not been as destructive. Again, grand scheme of things. Of course, there are certain businesses and certain industries that did get hit with it. But if we go back to the headlines of April, it was all doom and gloom. Everything's going to be destroyed. At the moment, it did not happen. Now, first of all, thank you for the super chat. Why is nobody talking about this sleeper? UEC, I've never heard of it in my life. Uranium Energy Corp. Again, like I said, I'm not much in the uranium, rare earth material type of companies and industry. First time I'm hearing about this name. Of course, I've heard about uranium, but I'm definitely not the guy to ask about these types of sectors. Then let's see some questions, and then we'll continue with some other stuff. Again, continuing on this 2026 theme right now, because we do have some comments from someone at Robinhood talking about 2026, where they're also, yes, I explicitly did not want to go in that direction. Lululemon is up after hours. They also reported their quarterly figures yesterday. It's always interesting to see a stock pop when a CEO is leaving the company. It's not a great thing for the CEO, but I guess the market did not like the way the company was going at the moment, especially not the stock. Company-wise, let's actually have a look at what they reported. Am I buying Oklo? I am not buying Oklo or any other nuclear stock for that matter. Oklo is trading at what is it? Still over 10 billion? $16 billion, barely any revenue. I mean, not barely, zero revenue, won't have any revenue for quite a while. So I'm not interested in those things at all. So Lululemon, let's see. This is basically the recap. So a beat for the quarter, for the annual guide, slowly lowered Q4 revenue, missing estimates by 0.7%, lower Q4 EPS guidance, a little bit missed that by 23 cents, and of course a new CEO, because the CEO is stepping down. GAAP gross profit margin is of course down year over year, but still in the mid 50s%, which again for this type of brand and company, it's not bad at all. Was better before. GAAP EBIT 17%, that's also down. GAAP net income of 12% here, also down, but still higher than a lot of their peers, I would say. Thanks for the super chat, really appreciate it. My thoughts on Grab and Melly. Well, one is easy to answer because one I love and I own a lot, decent. That's smelly. It's in my retirement account, has been there for a while, and I'm not. It's not going to disappear anytime soon. So I like it. I like it at this price. I like it at the price under 2,000. Like I said yesterday, I think it's an amazing company. Has been executing extremely well for the last decade and a half, actually. But yeah, one share will cost you quite a lot if you don't have access to fractional shares. As for Grab, I like it as well. I don't own it. I own it through my, let's say, exposure from Uber, but that's about it. I think, yes, it has been in the $5 range for quite a while, but in the meantime, again, this is a company worth $21 billion. It's a company that is growing nicely across the board, all verticals. Maybe they might expand through an acquisition, we'll see, but the countries that they operate in Southeast Asia are countries that are very much mobile first, I would say, and their GDP are also expected to continue to grow quite quickly over the next couple of years. And when you are Grab and a leader in a lot of these countries, you are going to benefit from that. I just don't think that this is a 10x in the making right now or anytime soon. But this is, again, a company that business-wise, it has been doing what it should be doing. Stock-wise, I think people had maybe unrealistic expectations just because the stock price is very low. But yeah, I'm bullish on Southeast Asia as a whole. I mean, Sea Limited is another one. I think it's a very good company that also has gotten hit recently. I think it's down 120. Yeah, so same thing here with Sea Limited. It's a great company. Business-wise, they've been doing very well. They're growing. They're also profitable or becoming more profitable. So good names to own, I would say, not to trade. My thoughts. What is this? Oh yeah. My thoughts on Rocket Lab and Uber. Again, the Uber target cut, I've seen way more Uber raises than cuts, actually. Let me actually pull it up. We've had actually way more Uber positive comments on Uber recently, and it makes sense. Of course, the stock itself did get hit. It's still up nicely this year over the last 12 months, but it's down 16% from the peak. Okay. It's not great, but it's not the end of the world. We do have here a RBC Capital reiterate outperform, maintains the price target at $110, sees stronger AV positioning, sustained growth, and capital flexibility as key positives post-management meetings. We've also had some comments from Uber themselves. The CEO went to Asia more recently, quite positive on those markets. Uber is cheap. I can't put it in any other words than saying Uber is cheap at the moment. So CEO here is calling robotaxis a $1 trillion plus business and says Asia will drive the boom, telling Bloomberg he expects to be in 10 plus markets by next year, sees great potential in Japan and big opportunities in Hong Kong and Australia. Uber is not standing still when it comes to autonomous vehicles, whether it's through partnership or strategic investments. Uber is moving. Here, WeRide and Uber just launched public robotaxi rides in Dubai with RTA, letting riders in these places book autonomous trips to the new autonomous option in the Uber app. The pilot runs with a vehicle specialist on board and targets fully driverless service in early 2026, backing Dubai's goal of 25% autonomous journeys by 2030s. Yesterday, there was also the Rivian AI event or whatever they called it. They also talked about their goals for 2026 with regards to autonomy. So as an Uber bull, what's happening right now is exactly what I thought would be happening, is that a lot of companies will come out with autonomous solutions. I think autonomous driving is going to be a commodity in the future. And when you have that, you're not going to have a one winner takes 90+% of the market. You're going to have plenty of players. And when you have plenty of players, of course, the distribution platform, in this case, we have Uber or Lyft but in my case, it's Uber, is going to be a big winner. in the future. Then as for Rocket Lab, of course, has seen its stock go up quite a lot. Same with AST Space Mobile. More recently, whether it's because of the anticipation of the Rocket Lab IPO, so a nice rebound on the 200-day here on the daily. It's probably a mix of SpaceX IPO. It's a mix of also this whole data center in space talk. And so this thing goes up, but you also have Rocket Lab specific news. We've had some pictures of some parts of Neutron being moved and being shipped to the United States. Would I be buying here? Probably not. I'm not going to be chasing it. I already have a nice position in that. But if you ask me purely which one's more attractive at this moment, it would be Uber. I know some people don't like it because they think Uber is going to be out of business, but they probably haven't opened one financial statement from Uber to be making that statement. But yeah, if you look at Uber right now, forward PE 25.3 times. Yes, the trailing one is very low, but I think that was just because of a one-time impact there. It is a very good business that is not cheap, that is growing. The retail e-commerce arm is going to be growing even further in the future, and that's something that probably isn't really priced in at the moment. We have free cash flow that's expected to grow 38% fiscal 25, then 11%, let's call it fiscal 26, and then 16.7% in fiscal 27 to reach $12.3 billion in free cash flow. This is a very, very nice slide for Uber. Then going back, we have some PayPal news. So the PayPal news, let's start with the positive PayPal news, because we've been having a lot of negatives. So let's talk about the positive PayPal news. It's not something that I expect to move the stock at all, but we've had this. We've had YouTube now lets US creators choose to get paid in PayPal USD stablecoin through PayPal's existing payout system. So sound did not cut. I just muted myself because there was way too much noise. So okay, this starts with US consumers, US creators. Once it gets available to Europeans, I will let you know how it works. But this again is PayPal trying to move quite quickly with things that where previously you would think PayPal would not be doing such a thing. So we have stablecoin, we have agentic AI, also a segment that PayPal is moving quite quickly with. So this was the announcement. Again, I don't think it's an announcement where PayPal will move. Far from it, to be honest. But it's a nice to have. Let's say it's a nice to have. Then we have a price target that's been cut from $83 down to $66. Again, the story here is always the same. It's analysts that had a much higher price target. Yesterday we've talked about someone that had a $90-something price target. He could have cut it a couple of weeks ago when the stock was higher, but now that the stock is lower, he does cut it even further. The key takeaways is uneven Q4 transaction volumes, raised near-term caution. Again, we can thank the CFO for that. Another investment cycle expected in 2026. This was known just, during the earnings call, which again, okay. Platform improvement timing uncertain, also was known during the earnings call. Long-term view still sees upside via branded checkout, Venmo, and agentic commerce. I could add there also buy now, pay later, and maybe reframe the branded checkout to the all branded experiences. Are PayPal and Venmo still the same? They're still owned by the same company, yes. But they are finally going to, it's working one with each other. No announcement will move PayPal stock unless it's an accelerated buyback announcement. But you know me, I've been screaming at them for that for a while. So far, no answer and no no movement from PayPal. What's interesting for Broadcom here is we have raises across the board. So this thing already flew very high. Stock is down a little bit, but from analysts, we have raises here across the board. We now have, I think, yeah, on this list, not one price target is below $400. Actually, not below $428 for Broadcom. Very interesting. Then as for the new, hey, where did that go? Okay, another positive one for Google, but where did my Nvidia one go? Okay, couple of things here. Nvidia is considering increasing H200 production due to strong Chinese demand, according to Reuters. So Nvidia may boost H200 production as orders exceed capacity. President Trump's OK exports to China with 25% fee. I believe the same for AMD. Alibaba, ByteDance among firms seeking large H200 orders. The Chinese government is yet to approve the H200 imports. Production constrained by focus on Rubin and Blackwell chips. H200 is 6 times more powerful than downgraded H20 chips. China may require domestic chip bundling with H200 sales. H200 made using TSMC 4 nanometers process tech. So that probably explains why we are seeing Nvidia up 0.4% today, and why yesterday it was down even more, but today seems like it's one of the only names that is up a tiny bit. I mean, again, I cannot always make new multi-bagger episodes because in some of the older ones, it has yet to be played out, right? I've talked about a couple of before, and it's still going to be the same. Those are still going to be the same. I know some people don't like it when I talk about the same names, but if the story has not changed and the price has not moved, then the potential is still there, unless, of course, it is not. But in this case, it is. You don't know why I'm saying accelerating buybacks, because they should be buying a hell of a lot more shares today. I know that the buyback yield is now closer to 10%, but that's the thing. They have the money. Why wouldn't you want them to buy way more today? This is exactly what Uber has done at the start of the year. They issued a statement. Our stock is undervalued. We are accelerating the buybacks, a one-time acceleration of, I think it was $1.5 billion. Right? It's great to have a share buyback program of I don't know, what was it, $15 billion or so. But what's the point to buy back only $1.5 billion each and every quarter? If your stock keeps going down and you believe that it is undervalued, you should be buying as much as possible at once. Not say, oh, we're going to stretch it out, because maybe a year from now, stock is going to be higher. So your buyback yield is going to be higher as well, lower. And so that's what I mean. Accelerating the buybacks mean buying back a hell of a lot more shares today than what they are used to. Good morning to you as well. Do we break all-time highs today? I don't know. And I don't know, and I don't care. I don't know, and I don't care. I don't own the market. I own stocks, specific companies. So we can break all-time highs. That doesn't mean that our specific names are going to be up as well. I know the Dow has been doing quite well. Then moving on to the next story is after Google came out with Gemini 3. Actually, I need to make the poll before the market opens. We have now ChatGPT 5.2. So things are moving, of course, extremely quickly. In this market, right? One model comes out, it's better than the other. Then next week, a new model comes out. This one's better than the other. Maybe it's better at reasoning. Maybe it's better at coding. Maybe it's better at imaging, etc., etc. What's interesting to me regarding OpenAI is that on the one hand, we have Wait, let's see. We'll end the day green, red, flat. On the one hand, we own, or I own Google, and I would like Google to win. But if Google wins, then that means that probably it's taking market share and OpenAI might be losing. But on the other hand, we have OpenAI, which if OpenAI wins, then this means that all of these big AI projects for AMD, Nvidia, CoreWeave, Oracle, etc., are going to be achieved. So we're in this kind of a conundrum here. Is like, oh, is this a good thing? Is this a bad thing? I think as long as everybody wins, I'll be happy. But I do think that just OpenAI is not going to have. It's not like an Nvidia story. I don't think that OpenAI will still have the majority of the market share for the next coming years. But hey, they introduced GPT 5.2. These are the comparisons. Thinking compared to 5.1. I don't know, I'm not using ChatGPT, as you know. I'm using Gemini. But yeah, it is better than 5.1. In some cases, much better than 5.1, which again goes to show how bad maybe 5.1 was compared to what they're having right now. There is one cool thing here, and that's this thing right here, the Excel sheets, or in this case, what are they trying to do? I thought this was maybe a DCF, but no, this is basically ChatGPT 5.1 thinking. This is how it creates stuff in Excel. Pretty bad, in my opinion. And this is GPT 5.2 thinking, way more organized. Maybe it's worth a try to make a certain DCF with it and see if it makes any sense. So we have a new model here basically for ChatGPT. We're going to have a lot more models going forward, that's for sure. New updates every single time. Some models will be better for coding, some others for imaging. That's fine. I think we are going to go into a future, I guess, where people will just be using multiple models for whatever they need. Did I see YouTubers? I just talked about that, but it's only for US creators at the moment. The pay USD. All right. More comments on 2026.
Powering higher today. Record closes for the Dow, the S&P 500, and the Russell 2000. 52-week high for the Dow Transports. Let's talk more about these record-breaking markets as we head into 2026. Joining us now, right here on set, is Stephanie Guild. She is Chief Investment Officer at Robinhood. It's great to have you. Welcome.
Thanks for having me.
All right. Stocks at record highs. What do you think?
Well, I'm a little worried about the S&P 500 from here. I do see it going up a little, into 2026, but not by as much. I actually think more of the action is going to be below the largest names, and we've started reflecting that in Robinhood Strategies, which is the portfolios we manage. If you look at since October 29th, the top 100 stocks performing this year, return-wise, only 41 of them. Or actually 41 of them, I should say, have a negative return since October 29th. And they haven't really rallied back since we had that pullback. So I actually think that's when the rotation really started. And that's when I think, we started owning, we've had things like regional banks, for example. Consumer names is really the other thing that we're starting to like as well.
Interesting.
Very interesting. You know why it's very interesting? Because that's exactly the data that we cover each and every week during the portfolio update on Sunday. And we have actually seen that since the end of, let's actually call it mid-November, we've actually seen suddenly a lot more of the names participate in a rebound. Because previously the markets were near all-time highs. But what have we been seeing is that a lot of the names, start of October, a lot of the names have started to take a big hit, have not been participating in the rally. This thing has been known. But mid-November, we've seen it flip. We've seen a lot of stocks starting to participate in the upwards direction. And yes, we've also seen that the big names started to be a bit flat to down. That's what we've noticed over the last 3 weeks, I would say.
We've got Broadcom earnings are out. We're going through those results right now. We'll bring them to you momentarily. In the meantime, it does feel like investors have been focused on two things and only two things, and that's been the Fed and AI. And of course, we're waiting for the next read on AI with Broadcom right now. But this idea of a rotation and a broadening out of the market, what's propelling that? And as we do see the shift out of AI, does it have legs here?
I think it does, because you have the Fed that just cut, and they're going to, I think they'll cut again in January. I know that's a low odd right now. I do agree with them that it will probably be at 3.5%. I think the bond market is actually telling you that it's going to get to 3.5%, because you can see that in the curve. And I think that's going to help consumers somewhat. Obviously, the Fed is also starting to buy treasuries, although on the short end. But I also think, like, all year long, we've been investing alongside, or at least in alignment with, fiscal policy. And I actually think 2026 is going to be a fiscal focus on the everyday person, on the consumer, because you do have midterm elections coming. And so I think there's going to be a reason for people to start to feel better, actually, about their economic, how they feel about it in general. And I think.
Well, a big statement there. Let's actually check the probability of a rate cut also in January of 2026, because last time we checked, the probabilities of a rate cut in January was very low, very, very low. And it still is very low. Right now, it sits, well, a 77.9% chance of no cut, 21.1% chance of a cut. Of course, a month ago, actually just over 3 weeks ago, that was a bit higher because the market was not expecting a cut in December, but we got a cut in December. So right now, probability of a rate cut in January is very low, is at 22.1%. Let's have a look at the March one. In March, 40% chance of a cut for March. So we'll see. We'll see. I'm not anticipating a cut, to be honest, in January, unless really the data is so good or maybe so bad. That's also a thing, so good or so bad that they are forced to cut, or they think they can cut because the data is not as bad as expected. I would say that looking at the PE for Intel right now does not tell you even 1% of what's going on with Intel at the moment, and looking at the PE and making up your mind on any company is a very bad move, I would say. Let's look at some other comments here that we've seen. We have some time. Do I lose sleep on the Japanese, the yen carry trade? Not really. At least not yet. Not yet. Because remember, we also had that panic August 2024. But no, I don't lose sleep on that. At least not for now. What price would I buy more Nebius? I said in the low 80s if it happens, and if it doesn't, then it doesn't. I'm very comfortable with it at the moment. Replacement. Wait. Replacement for Powell, yes, but it's going to be announced before, and like Tom Lee said, it's going to take 90 days, right, from the vote happening until he actually enters and takes the position. But yes, in May, Powell is basically out of his main job. But we should be hearing about the new candidate over the next 30 days or so. And remember, Jerome Powell was a Trump Fed chair. I do lose sleep over a lot of things, but not this. First of all, thank you here for the super chat. Appreciate it, Robert. Thank you very much. Could I comment on CoreWeave versus Iron or Nebius on the FedRAMP? CoreWeave has started to pursue the federal market. Correct. So I own all three. I own all three of those. Of course, I own all three. My biggest one is Nebius. Then I do have CoreWeave and Iron, which are quite close one with each other. Now you're asking about specifically FedRAMP. Yes, CoreWeave has been making those moves, but it's not surprising. And that's one of the things that we've talked about before is with CoreWeave, they are the biggest one at the moment. Okay, they're the biggest one at the moment for reasons that, one, they have the good relationships. They are the biggest investment from Nvidia. They have a huge backlog compared to all the rest. And yes, they are moving maybe faster. In this case, we're talking here about some federal stuff. It makes sense. Do I think the others need to do it as well? I don't think so. I think Iron still has a lot to do with regards to switching out from ASICs to GPUs, with regards to building and acquiring more and more GPUs. So they will have enough upside just by achieving that. And the same with Nebius. Nebius has that huge Microsoft contract that is still ongoing and still needs to be delivered. Now we have that Meta contract also needs to be delivered on, and the expansion plans, whether it's in the United States or in Europe. There's no need, in my opinion, for these companies to start trying to apply for in this case FedRAMP or some other stuff, because the roadmap ahead, and especially for Nebius, they're more focused on enterprise. They're more focused on these types of things because that market is very, very big. And then eventually, if they want to go that way, federal government, then they'll probably go. But yeah, the thesis for me is not based on whether or not you're going to have government. I think there is enough money flowing into the tech market, private public market for all three of those and some others as well to be making quite a lot of money. My reason to go heavy in Nebius is purely because the team, the experience, the execution, and yes, also the fact that they are focusing quite a lot on the software side of their offering. Don't have to, but you ask the question, I answer. Do we think yes? Because they are, again, the commitment. The thing with CoreWeave is that they are not going to overbuild. So everything that's happening is based on commitments. So I do believe in their backlog. And again, if you look at their backlog, it goes the 55 billion. A big chunk of it is for the next 2 to 4 years. So yes, they have time to find the land and the power. Plus now active power-wise, they are by far the biggest. It's not even close if we talk about active power. Quickly touching on this right here. So, rethinking of the AI trade. The AI trade has been going on for 3 years. Is 2026 going to be different?
Why don't we start off with the action that we're seeing in the futures, a lot of it being driven by the Broadcom earnings. We had a guest earlier said it's another moment of doubt for the AI trade. Do you agree with that sentiment? And then how do you play this? We have so many moments of doubt even after strong reports.
Yeah. There's a lot of moments of doubt, and it's not just today. It's been over the last couple of weeks, and I think that's why we've seen this kind of rethinking around the AI theme. It's not just go in with any AI stock. It's not go in with tech completely. You really have to look at each company independently, look at those cash flows, look at those balance sheets, and see if it makes sense what we're seeing with the CapEx along with the expectations of what these companies say they're going to do.
We were also talking about the chatbot race between OpenAI and Alphabet, Google, whichever one you want to call it. As you're looking at that, it's not clear who's going to win. We had a great guest on XI earlier, said it's a dead heat right now.
Right.
And we're in the early innings, and we're using a lot of mixed metaphors. We're doing some track metaphors, baseball metaphors, but either way, it's still early in this. When you're talking to clients, how do you talk to them? What are the criteria to pick winners, potential winners at least at this point?
Within AI themselves.
Yes.
So we're actually underweight a lot of the AI names versus the benchmark, and we're trying to spread things out a little bit because we don't want to put all of our eggs in that basket. Start looking maybe at some of the secondary players in AI. Who's actually going to put AI to work the best going forward? We've had a lot of talk about healthcare today. Maybe it's healthcare that's going to use it really well, or manufacturing, other type of industrial names. I think start looking wider than just those Mag 7 names.
All right, I want to get your word of the day.
I don't know who she is, but I agree. I agree with her because we are entering this phase where if you believe in AI, we are entering this phase where a lot of these companies that are using AI, this is why I'm very bullish also on Meta, you are going to see the efficiencies. And she brings up the healthcare space. I agree with her. That's also one of the reasons why I'm long Oscar, not just because of this whole ACA enhanced subsidy story that's going on right now. Oscar is already thinking way ahead with ICRA and just restructuring the whole industry in their way. They are heavily reliant on the use of AI, which would make them way more efficient, which of course should help them from a financial standpoint. But it's not just Oscar, it's the whole healthcare ecosystem. If they are using AI in a good way, they're going to become way more efficient, and hopefully that brings down the cost of healthcare. That's the best case scenario. She's also talking about manufacturing. Same thing there. If you can start automating a lot of things, cost will come down, output goes up. So maybe look at those types of names, because I do think that we're going to enter, and I still think there is a lot of upside left for the big tech companies and the big AI names out there. But we are now entering a period where, yes, you are probably going to see also a lot of upside in the companies that have been using AI to make their business, which their business does not have to be a tech business, but to make their business fundamentally more efficient. And I think that will be the story 2026 and onwards. If you were to look at maybe non-big tech AI names, I think that's the way to think about it. Just my opinion.
It's owlish. I'm assuming that's in between hawkish and dovish.
It is, but when you think of characteristics of an owl, you're thinking logical, analytical, deep thinkers, problem solvers, observant, right? These are those characteristics. I think this is what investors need to be right now. You can't just say, I'm going to just look at a sector and any stock in that sector is going to do well. You're going to have to dive in and really do the work. What are the trends saying? Find those sectors where you're seeing the rotation right now in the market. When we have a little bit of a pullback, that'll be your opportunity to go in.
All right. You're also looking at the labor market and the consumer, and you're worried about some weakness. At the same time, your pick for us today is a consumer-facing stock.
I knew you were going to be confused about that.
Yeah, so what's the thesis? Is this a trade-down play for higher income people? Are going to trade down to this? If you're worried about these two things, why pick something that's directly reliant on the strength of the consumer and the labor market?
Yes, so our stock is McDonald's that we're looking at. It's similar to the Walmart story. So over the last couple quarters, people have been concerned they've been losing some of that customer, that lower income consumer at a double-digit pace, but they're widening their customer base and bringing in higher income consumers at a double-digit pace, similar to what Walmart has done. So you have that. You have value meals coming in, the $5, the $8. I mean, look, I'm a 2A meal with a Diet Coke any day of the week at McDonald's, and you add a 2.5% dividend. They're becoming less capital intensive, and McDonald's.
Okay, we do have a minute and a half left, so let me switch over to this. But is she making a point here with the McDonald's story? Maybe. We could definitely see maybe a switch towards more, as rates come down, towards dividend-paying stocks with maybe some growth there as well. I don't know, but on the McDonald's stuff, I may be a little bit less convinced what she's saying, but on the other stuff, especially the healthcare, I think that makes more sense. Currency, thanks for a super chat. Did I buy anything this week? I did not. I did not buy anything this week, or at least not now. Am I looking at certain stocks? Looking, yes, but other than that, not really. I said last Sunday during the portfolio overview that I'm done buying unless we see really big opportunities. I'm seeing some names that are still very attractive, but we'll see. We'll see if I will be buying more. I maybe going to trim some Micron going into the earnings report. And with that, ladies and gentlemen, ding, 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 bing, bing, bong, bing, bong, the markets are open. Let's go. Markets are open. It is a Friday, December 12th. Oh, almost Friday the 13th, but no. Friday, December 12th. Markets are open. Let's see what we get, what we've got for us right now. We'll let the stocks do what they do best at the start of the day. They go up a lot, they go down a lot. So let's see what we've got here. I will close the poll, of course, because some of you like to manipulate the vote. So we have 61%, 61% think green, 23% red, 16 flat at the moment. Let's keep this open. I'll try and look at some news here. So yeah, yesterday's news with regards to Disney and OpenAI is still an interesting one. Still an interesting one. I remember this name, Rent the Runway. So it's a very strange company. It's funny how much the sentiment has changed around Google. Crazy. Every day we have new price targets that are higher and higher. The commentary is always very, very positive, which is usually when you have to start to be a bit more concerned about chasing these names. All right, Maxwell, hello. Do I think Shift4 can be a $57 billion company within the next decade? I mean, that's more than a 10x, right? That's more than a 10x. Everything's possible, but from the $4 or $5 billion that we are at right now to $50-70 billion in the next decade, a lot of things need to go right. So let's maybe start with being a $10-20 billion company first. But I did not buy this because I thought it would be a $10 billion company. Yes, I bought this because I do believe it can become a much, much bigger company in the future. Now, 70 billion, again, you're saying the next decade, so maybe 10 years down the line, it's possible. It's definitely possible. It's one of those names I still like a lot at these prices because, again, it's one I'm thinking about, okay, I'm going into 2026. Performance-wise, it has been very well, very, very good this year. But there are still some names, I mean, PayPal is one of those names, PayPal is one of those names, Oscar is one of those names. I mean, Rubrik recently had their move, but I think they can go higher in the future. Shift4 is another one, Oscar, the local, etc., etc. Those are the names, and even Uber, even though Uber is up this year already. What is it? Year to date for Uber is 36%, so also very good. Looking at how I can continue this run in 2026. Now, of course, if we have a bear market in 2026, that's possible, whether it's at the start or towards the end, then it doesn't matter if your stock is cheap or not. Everything is going to be pulled down. But okay, again, we are here to make sure that our positions in certain companies that we like gets increased over time. I do plan on making some specific videos about these types of moves going into 2026. I went into 2025, right, by buying Uber, Alibaba, Micron as, let's say, contrarian trades, but it's not really that contrarian if you think about it. And now for 2026, maybe just continue with what I have, but put a little bit more emphasis on these types of companies. Yes, I am heavy fintech. I think fintech will continue to do very well. Healthcare should be doing well, so that's Oscar for me. But like I said, United Health, I do expect them to have a market-beating year next year. Might not be going up in a straight line, but I do think that this company is going to show EPS growth next year and in the next 2 years. That's basically what their guidance said. So it's going to be an interesting year. I do think that maybe the easiest of the gains have been made over the last year or two, but it doesn't mean you cannot find more gains in the upcoming year or so. Captain Harris, hello, how are you? Do I have an opinion on Zeta? I mean, I don't own it, but I've covered it since $12. I think they've been performing very well as a business. Robotics, again, robotics is a team that's going to continue to get a lot of traction. Same with drones. Do I own any robotics specific companies in the portfolio right now? No, but indirectly, yes. But I know Rich Tech is one of the names that has popped up quite a lot. And Symbotic is another one. But I don't need to own them. That's the thing. I don't own a crystal ball, unfortunately. Who do I think SoFi could acquire in the near future? That is a good question. I don't know. It's either something crypto related, I would assume, right? But I don't know, and honestly, I don't think they should. I don't think they should. They could, but I don't think they should. They could be using that money to just grow organically or make sure that they can maybe accept more loans and expand that way. But if I have to name a name, I cannot come up with a name at the moment. So, fintech, we've got more green than red. Of course, PayPal is green right now, down 0.1%. Still have four consecutive green candles all in all for now. Hood is up a little bit, 1.1. Shift 4 is up 0.7, whereas SoFi is also up today. A nice rebound here on the 100-day moving average for SoFi. Then as for the rest, again, Webull is up 2.2, so back at $10 for now. dLocal is down a little bit. No crazy moves actually for the fintech list. As for the neoclouds, we have, again, it might not look great, but look at how many green candles you have. For Hut8 is basically flat. Iron is up 0.2, Cypher 0.1. Same thing here for CoreWeave. Nebius is up 1%, Applied is up 1.6, and White Fiber is up 5.6% at the moment. Looking at chip names, we have Broadcom that's actually down 7% at the moment. Micron is down 2.8, Clack is down 1.2, ASML 1.1, Lam 1, Marvell 0.6, Applied Materials 0.6. Also same for TSM. AMD is basically flat. Qualcomm is up 0.3. Nvidia is up 0.8 now. 0.9 is Intel at the moment. When does SoFi become a buyout target? Why would it become a buyout target? It would never become one, if you ask me. Let's see. I still have Pagaya shares, yes. I don't have options. I have pure Pagaya shares at the moment. Then as for big tech, we have Google that's up 0.2, Netflix up 2.5%, so a solid rebound. Will I regret not opening a position in Netflix? Probably already regretted not opening one up in 2022, but okay. So we have seen a little rebound here from Netflix. Tesla is up 2.5%. I don't know if we had actually some news. Amazon is down 0.1. Apple is up 0.3. Microsoft 0.5, 0.6 down. Same for Meta. And Oracle is down 2% at the moment. We did see it yesterday close out minus 10%. So there has been some buying action again here at around $187. Yeah, let's look at the other list here. The general list. So Rubrik is down 3.8%. So is it going to close that gap again from the earnings jump? it's going to be very difficult to justify such a, let's say, crash or pullback, because it should have never been at around 70. But okay, we'll see. If it does go back, then I'll be buying again at $70 for Rubrik. Micron is down 2.8, AST is down 1.6, Zeta 1.3, Palantir 1.7, Shop 1.2, Marvell we've seen this as well. BMNR is up 0.1%. Amazon we've looked at. Rocket Lab 0.5, so I mean, it's still a crazy run up here. Novo is back above $50, ladies and gents. Novo Nordisk is back above $50. PayPal is showing some green at the moment, although it always likes to tease us. And Meli is up 1.1% here as well. As for Reddit, $235, 0.9% up. United Health up 1.1%. Adobe is also up 1.6%. So here as well, some solid momentum. Well, small momentum, I would say, which again, it's literally copy-paste. For Salesforce and Adobe, it's exactly the same move. Oscar is very volatile recently. Again, it's nothing really new with regards to this enhanced subsidy thing. dLocal, Duolingo, again, up 2.62%. If I had to choose one, Meli versus Amazon, it's quite interesting. It's like as if you hacked my computer and you know what I'm going to talk about in the next couple of days. Again, Meli could potentially provide you and probably provide you more upside just based on market cap expansion. But in my eyes, you cannot go wrong with any of those. I own more Amazon than Meli at the moment. But if I had to choose one for today, probably, I don't know, it's probably Amazon, because Amazon has so much going for it. And the stock does not reflect it. Right, it's shouldn't be here, but again, fine. Do I have a? Yeah, I'm also going to cover Disney actually in another video. I know it's not that interesting for a lot of people, but at one point I didn't even know it was back at 100 at end of November. But Disney is, again, if streaming, right? If streaming is such a profitable business, we can look at Netflix and we can see that. So if Disney Plus can replicate it, plus you have the Disney parks. Let me actually pull it up, cash flow wise for Disney. Let me pull up cash from operations and free cash flow, and I'll show you. So this is basically what we are getting from Disney and expected to get. Free cash flow. Actually, let's do from 2023. From 2023, free cash was expected to grow. What the compound annual growth rate from 2023 all the way to fiscal 28 is 16.25%. Cash from operations is 15.1%. If we go and look at 25 all the way through 28, we are seeing, again, it's not growing that much, but it's still producing close to $10 billion in free cash flow and close to $20 billion cash from operations. So yeah, where can Disney go from here? I do think it can produce double-digit returns for shareholders. You're also getting a small dividend. Didn't know, the yield is at 1.4%. Will it go back to $200 soon? I don't know, but it is improving. It is improving. Neil, did Trump say he's not considering a? I haven't seen anything specific about it. It's very all over the place right now. I'm pretty sure that once we actually have a real announcement, we are all going to know about it. But as of now, it's a bit, he does this, he says that. One politician wants with this plan, that plan. We'll see. Robert, thank you for the super chat. Again, really appreciate it. Palo Alto Networks and IBM are well positioned to profit from M2M security regulations. Better these than Rubrik. No, because for me, no. I own Rubrik because again, Rubrik company-wise, it's small enough for it to become a multi-bagger for me in the future. It's growing quite nicely. It's also let me actually try and pull it up. Allez, Rubrik. So M2M, of course, is machine to machine security. If we have here Rubrik, they're not profitable, of course, just yet. They do generate free cash flow with a 21.5% free cash flow margin. Rubrik is way more focused on identity, resilience, and all of that. The Palo Alto's, CrowdStrike, Zscaler, Okta, you can all maybe put it in the prevention category. Rubrik comes from a standpoint where, okay, you can try to prevent attacks, but we believe that attacks will anyways happen. If you look at the data, attacks are happening and will continue to happen. So we are here to already protect you from the step that Palo Alto, CrowdStrike are attempting to solve, but cannot solve 100% of those. So again, they're all positioned in the cybersecurity industry, but they're all trying to do different things. Especially Rubrik is doing different things. They have, of course, partnerships with CrowdStrike, with Okta, and I think also Zscaler, if I remember correctly. So no, CrowdStrike and Zscaler. Yes, if they do their job, Rubrik is going to be obsolete, but we know that that's not happening. It's not going to happen. So that's where Rubrik comes in. It's when the first line of defense fails, at least you have that second line, which is a pretty big deal. Do I think Rocket Lab will go down? Rocket Lab has been going up because SpaceX might go public in 2026. So I don't think it will go down because SpaceX will go public. I think it will actually make Rocket Lab maybe look cheap despite its expensive pricing at the moment. You have a crystal ball? I do not have a crystal ball. But if you look at the data, it's pretty clear that nobody can prevent attacks. So let's see if we got something else here. What's my next video going to be about? I have a couple of ideas. I think I should still, it's the end of the year, so maybe some recaps about specific companies and then the plan going forward. So yes, I will probably touch again on PayPal. The biggest BS. Why is it the biggest BS? We know you're using them, but get us also because they're not good and XY it's not speculative business model. It's based on facts. Just again, stop making these comments. Just go on the website, go on the investor relations, look at the results, look at the presentations, and you will see what exactly they are doing. Do you think companies will be like, no, you know what? Actually, speculative business model. We rather actually get hacked, get extorted, lose all of our data, pay a huge fine, instead of paying Rubrik for a solution that actually works and makes our lives better. Do you think there is one company that thinks like this? If there is, I would love to know them and short them to the ground. Because that would be the stupidest statement that any company or executive could make. It's like, oh, we're already paying for CrowdStrike. We know they're not bulletproof. And so we don't want Rubrik because apparently it's a speculative business model. They're not used. You're not going to pay for Rubrik after the fact. You want Rubrik to be there all the time because you don't want to act after the fact. Once the act is done, you're screwed. You want Rubrik to be there no matter what. You're not going to wait, oh, sorry lads, I got hacked, I lost my data, and now I'm screwed. No, you would need Rubrik even before that happens, because that's their job. Do we have some more moves here? A little bit. Yeah, a little bit more of red. So yeah, Nvidia is back in the red a little bit. Can't catch a break, it seems. Uber is red a little bit. Google, what are the financials? The most important one is PayPal is green. So maybe there is some buybacks happening at the moment, although volume-wise, it's not the craziest, although we have seen some green, but it's not the craziest stuff here. Well, it's not hopefully I'm right. It's just written black on white or whatever color they're using in their financials and presentations. All fintech green, most fintechs, not all. Chime is red, but it has been having quite a good run. Klarna is red, Affirm is red, Pagaya is down 1.1, dLocal is down 0.4, SoFi is down 0.2, so still around $27, which again is not the worst thing. NeoCloud mostly red, although White Fiber is up almost 6% today. The rest is down almost 1%. Chips are all down other than Intel. Now again, Nvidia green, Qualcomm is up 1% here as well. And as for big tech, we have Oracle down another 2.2, Amazon 1, Microsoft 0.8, same for Meta. Google is basically flat again, 0.1%. Then you have Apple greenish, Netflix is up 2.2 and Tesla is up 3.4. So what's the news for Tesla to be up? Is it maybe some autonomous talk, I guess? I wouldn't call Rubrik high risk. I wouldn't call Rubrik high risk. It's not a quantum name or a nuclear stock. It's an actual business in cybersecurity that is growing rapidly. So apparently, Elon Musk mentions convergence between Tesla, SpaceX, and xAI once again. I don't know what that means, but maybe that's one of the reasons why the stock is up today, possibly. I do still think that we're going to see quite big moves business-wise with regards to full self-driving and robotics. Whenever that happens, I am still wondering if us Tesla shareholders are going to get access to SpaceX, because that was what was promised to us. Okay. Then, as for the rest, Oscar is up. So Oscar on Wednesday, Oscar was down 8%. Then yesterday it was up 1.8%, and today it's up 3.6%. So almost back to where we were at the start of Wednesday. It's not profitable, so it's high risk. That's not how I see things. Not being profitable does not mean high risk. Having zero, let's say, way towards profitability with zero revenue, that would mean, for me, high risk and being worth tens of billions of dollars. That's probably high risk. But just because a company is not profitable today does not mean it is high risk. It just means it's not profitable today, period. It is generating free cash flow, has 21.5% free cash flow margins. So they're doing somewhat good. I'm not considering selling Rocket Lab in the next 3 weeks. I mean, we're going to have a Neutron in Q1, hopefully 2026. So I'm not selling. I'm not buying, but I'm not selling. Are you called Rubric? You are not. You are not. But yeah, I mean, bank loans. They would give you a bank to go in debt to study some BS degree, but they won't give you a loan for a good business plan. That's how banks work. Broadcom, where is Broadcom? Ooh, Broadcom down 9% right now. Again, in the grand scheme of things, is it such a big deal? Probably not. Probably not. If we look at the weekly, it's not that bad. It's not that bad. Again, good report, just maybe a lot of anticipation, I would say. And then, yes, maybe there are some questions about future, I mean, the current customers may be relying less on Broadcom in the future, but it doesn't seem that way based on the backlog and the roadmap. So yes, you get a 9% pullback. First line here, 50-day moving average sits at around $362, then $339, and then the 200 sits all the way down to $280. Let's see. I mean, it's the usual market open, right? Where it starts a little bit red, then we see a rebound, and then well, over the last couple of days was actually closed quite well compared to where we did open. So I don't think we can complain much about what's been happening. Yes, November is definitely a shitty. November was for me a shitty month for sure. But then again, it comes at after we've had 6 consecutive months of everything going up and looking quite rosy, I would say. How to take advantage of the World Cup in North America? If you can get access to tickets and sell it for more, I guess that's one way to take advantage of it, because tickets are already going for a hell of a lot of money, even on the official websites. It's crazy. But other than that, I guess an Uber, I guess Toast, Shift for these types of things that have major exposure in North America are probably going to see a bump for that quarter. But that means that in 2027, it's going to have a difficult year-over-year comparison. December ain't much better. Well, I think December is for now much better than what we've seen in November. I mean, from the start of October all the way to, let's say, mid-end November, I think I personally took a huge hit, despite a good earnings season and all of that. So yeah. Archer will be used for World Cup for VIPs. I highly doubt it. Yeah, I mean, okay, for the final, okay, but if you look at, I think I spoke about it with my cousin today. I think Portugal, Colombia is also going for, I don't know how much, but the fact that you have regular games that go for $500 right now is crazy. It's crazy. If we could buy a stock, I mean, he said if we could buy a stock, we should be buying FIFA stock. They're probably making a lot of money. And there's probably also a lot of money going under the table, if you know what I mean. So yeah. Amazon story. Market goes up, Amazon goes down. Market goes down, Amazon goes down. And you know who does the same? Pypl. It's the same thing here, but I agree. I agree with you. I agree. So it seems like we are now in the period of the day, the market, where we are seeing a little bit more red after seeing a little bit more greens, the usual flip-flop, which means we can now go and look at maybe the VIX and see what has happened there. So the VIX today is up a little bit yesterday. So yesterday, it turns out, yeah, we've seen a, when did it happen? Let's look, 1 hour. Yeah, so yesterday it started to go down quite hard towards the second half of the day. So it is again very low. It is again very, very low. But yeah, we are also in December. You know, December is usually used to be a quiet month. PayPal is back in the red, flat red. Yeah, indeed, indeed it is. Crystal Palace did win yesterday. Yeah. Crystal Palace did win. Aston Villa won yesterday. They're on a 8-game winning streak across all competitions. Very impressed. Very impressed with the turnaround there by the team. Next week is triple witching. That means weird things can happen with prices as hedges are unwound. I mean, witches get stitched. No. Next week, yeah, next week we do have CPI report, so that's definitely going to move the market. You paid £200 for quarterfinal tickets, Italy versus Ukraine in Germany 2006. Well, at least you got to see one heck of an Italian team, which went on to win the actual World Cup. Legendary team compared to the absolute, I would say, garbage that they have today. Apologies to my Italian viewers, but it is the truth. World Cup and sports brands like Adidas, Nike, Puma, do you think they will benefit largely? No, not benefiting that much, because I mean, every year you have a football season. So yes, this year you will have World Cup season, but I don't see how they will get a huge boost. You will be back? I hope so, because it's way more interesting when you have a good Italian team. But for now, I'm looking across the top Italian teams, let's say. None of them really have crazy academies, like academies that you see from Barcelona or from Chelsea, Man City, these types of teams. You actually have academy players that graduate and become first-team players and then become, yes, the Cole Palmers, the Phil Fodens of the bunch. In Italy, you don't have those. But you do have Yannick Sinner. Yeah, Duolingo is quietly making or trying to make its way, because there is a huge gap to fill all the way to 260. It won't happen very quickly. I think, again, 2026 is a year for Duolingo to prove itself that the strategy is working, attracting more users, and then eventually they will have to monetize them, because otherwise, why would you buy it? But I do plan on covering them in a video pretty soon. Anything else? Melly is back above 2,000. Easy one here. Adobe continues the run up. Very nice. Again, these are names. These are names where I think going forward, if they continue to execute, and if the market really does want to pivot from, oh, we're only chasing AI names, we're only chasing these quantum nuclear zero revenue type of companies, that the money will flow in those low valuation, low PE, very profitable companies, such as an Adobe, such as a Salesforce, I would say even an Uber, then eventually Amazon will also look like crazy cheap. I do wonder if 2026 is the year when Amazon starts buying back shares. I wonder. Walmart all-time highs today? Wow. See? Yes. Wow. Insane. Incredible stuff. This was the earnings. It's up 16% since earnings. Very nice. Very nice. We're talking here about football games in the 1970s. That's 24 years before I was even considered stepping foot on this planet. Walmart is opening a store in space. Yeah. Supermarkets in space for the data center people in space. I mean, they'll have to shop somewhere, no? My thoughts on Atos. I don't know what that is, so let's see. Therapeutics. Not my thing. Not my thing. I miss Pirlo, Totti, Del Piero. Who doesn't? Who doesn't? And the list goes on and on and on. I have looked at Intuitive Surgical. I've looked at it before. I mean, when it crashed, we did cover it, and it did rebound after the last earnings report. Because again, this was a stock that is always trading at a premium. Whoever bought it here, congrats, you bought it at a less expensive price, and since then it has gone up because the business executes and the market liked what it heard, and then you've had this huge run up again, rebound on that company. It's probably also trading again at a premium at these prices. One stock that did trade at a premium previously and is now not trading anymore at a premium is yes, the Trade Desk. It is indeed very compelling, but for me, I don't need it in my portfolio. For those that own it and want to accumulate, I guess today, I mean, at these prices, 40 or just under, is definitely way more appealing than before. Even after the rebound that we've seen here back in July, August. It made no sense here, and I said it, no sense here, then made more sense here, still ran up too fast here, and now we're back at these prices. 2026 for that company is also a year where they have to prove themselves. They have to prove that, okay, our business is actually doing well, and we are seeing an acceleration in growth. If you are going to see an acceleration in growth, then I do think that you're going to see this stock start to move back up. But doesn't mean it should be going to $90 like this, because if it goes back at $90 in a month from now, it's again super expensive. Le Core Weave, what is it doing? Okay, we can have a green week if we end like this, but on the day we are down. I won't be spending time watching World Cup, considering also Italy won't take part. They can still take part. They just have to win the next 2 games. It is very, very crazy to say what you just said. I'm not even going to say it out loud, but it is very crazy to say what you are trying to insinuate right here. There is nothing that comes close to Prime Eden Hazard, and he's the only one that was considered coming close to the other two, which is Messi and Cristiano Ronaldo in his prime, which unfortunately should have lasted for longer if he would have stayed at Chelsea. But he dreamt about going to Real Madrid, so it is what it is. Credo, we've previously touched a little bit on it in previous live streams. They are doing extremely well. They're doing extremely well. It's not really a company that I follow. I know they reported a week or so ago. The report was very good. Stock is up significantly year to date, 105%. It has seen a pullback right now, 22% or so. But it's a company that is growing very, 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 very fast. So good execution. Maybe here as well, the stock has maybe run up too fast for it to justify the price. Prime Alexis Sanchez, no. Also, I would disagree. Again, it's not me saying that Coutinho or Alexis Sanchez were not good players. They were excellent players. But something else. When you watched Eden Hazard play, whether it was at Chelsea or the 2018 World Cup, something else. Like every time he touches the ball, you know there is magic coming right after that. I cannot say it for other players. You can say it for Ronaldinho back in the day, for sure. But nobody comes close to my Eden, which sits right in front of me. Like literally here behind the screens and the camera, there is a nice Eden Hazard frame with a signed Chelsea t-shirt. Wunderbar. Yeah. Thanks to Jose Mourinho. Who's selling? What's selling off? Yeah, I mean, yeah, a sell-off here a little bit for Broadcom. But we've seen, I mean, the lady at the start of the stream, I am a Chelsea fan, yes. My thoughts on Giroud? I loved him. Very, very underrated. I'm quite happy with everyone that left Arsenal that came to Chelsea. Whether it's Ashley Cole, Giroud, Fabregas. They all won with us. They all performed even better with us. So I like them. But yeah, with Broadcom, again, we've seen at the start of the stream the comparison. Broadcom was trading at 45 times forward PE, wherein Nvidia is trading at 25 times forward PE. So are we surprised by this? Yet. We are not. The S&P is down. I'm not. Again, it makes sense if you look at the stocks that are down. The big tech names are down. If you look at the chip names, they're down as well. Even with fintech, now everything's flipped to the red side, which means 16th. Now it's up a little bit more for the VIX. It's normal. I mean, it's normal. It's what we've seen actually over the last couple of days. Very volatile intraday moves. Will Luka Modric win the World Cup? I don't think so. 2018 was the year and didn't happen. But since I'm a Chelsea fan, how was the feeling of having Mourinho as coach? Can you not love him? I love the guy. I love the guy, and I was sad when he left the first time. I was sad when he left the second time, and I wished we'd had him for the third time. And if he does retire in the next couple of years, I hope he becomes a director at the club. I know a lot of people don't like the way he plays football. But the guy is a serial winner. He has done things with teams that, as Couch, yeah. He has done things with teams that other coaches would probably not have achieved. And he does know how to spot players like a Scott McTominay, for example. When he was at Manchester United, he spotted them. He spotted him. So, yeah, you might not like the park the bus type of of play, although with Chelsea, right, they were branded park the bus, but we also scored an insane amount of goals under him. It's just that we were insanely good at defending as well. Plus the treble that he won with Inter Milan, great. With Real Madrid, I guess the only thing there is that he didn't win the Champions League with Real Madrid, which, yeah, is maybe one of the only bad things you can say. And yes, of course, Conte is another one where serial winner, the club should have given him whatever he wanted. Because the way he won our last title in 2017 was also something. Should have given him whatever he wanted, because our team, other than, yeah, we had Diego Costa, Fabregas, Eden Hazard, and some key players still, we should have given him what he wanted. Why is the market red today? Because. Why is the market green? Sometimes markets are red, sometimes markets are green. But when the markets are green, nobody asks the question why the market is green. So. Mourinho has to win with Benfica. I mean, he won against Conte this week. Let's see. Who's winning for now in the, I guess, Sporting or Porto, I assume? Yes, Porto. 37 points, Sporting 32, and Benfica 29. They all win most of their matches. So. But Benfica's team is not, I mean, it's not the greatest team at the moment, player-wise. I think you should be buying or adding a couple of players here and there in January. My favorite food? Any day of the week, any hour of the day, you give me pizza, and I am a happy man. I'm a happy man. Pizza is my favorite. Italian food's my favorite food. You give me pizza, pasta, I'm good. Ah, yes. This is Napoli-Chelsea. Let me know if you want to join. I mean, if I can join, I'll definitely. I don't know how I should let you know. So maybe send me a DM on X or on an email. But tempting, very tempting, I would say. Very tempting because it's going to be a very, very big game. The one with the pineapple, I never had pineapple on pizza, and I don't think I will ever have pineapple on pizza. I like pineapple, but I respect pizza too much to have pineapple on pizza. Yeah, I've also heard that in Napoli you have a very good pizza. Very good. Oh, now I want a pizza. Thank you very much, guys. I appreciate it. I appreciate it a lot. The pizza cravings. But yeah. No, I'm from Belgium, so Europe, not United States. All right, final tour here, final recap on what's going on in the market. We are seeing more red than green across the board, even fintech, although some fintech names are green, such as Shift4. Neoclouds are mixed now, seems to be volatile there. Chips names are all red, with Broadcom being down 9.6% at the moment. And then big tech all red, other than Netflix being up now 2.3%, Tesla up 2%, and Apple basically flat. Oscar is up 3%, Adobe 2.8%, United Health 1.8%, HIMS 1.8%, Duolingo 1.7%, but all the rest is red at the moment. Again, we've seen that yesterday. And then towards the end of the day, we are improving a little bit. This is Friday, so it might be different. So we'll see. Chicago style, I did have, I think, Chicago style once when I was in Chicago, which was 13 years ago, I think. Yeah, 13 years ago. Flavor of pizza, I am a simple man. Margarita. Sometimes alla vodka, like my penes alla vodka, I like it. It adds a little bit of a extra twist in the sauce. Molto bene, molto bene. All right, ladies and gents, thank you all for joining me this fine, yes, exactly, Neapolitan. Okay, we're going to end with a very nice super chat here. I appreciate it. I like the very cute cat in the picture. Thank you very much for a super chat, and thank you for joining the live stream each and every day. Appreciate it very, very much. Have a great weekend. Have a great rest of Friday, everyone. Grazie mille, muchas gracias. And we shall see each other in the next one. And if not in the video, then Monday morning. Thank you all, and have a wonderful rest of your day. Bye-bye.